Forgot I left the charts up there. How's everyone doing today? Let's go. Got some good news here for AMC. Good news for Hollywood. I mean, it's going to take a little bit for this to get started, but I mean, dude, like I said, everything for AMC in the long term is looking good and good and good and good. We're back up to 355. Everybody that was sitting there like, oh my god, they're going to have to go to $2 in reverse, but just calm the fuck down. AMC will be just fine. Like I said, we might need to do one more capital raise to get through you know, the little bit more of cash burn we'll have for this year. Not a big deal. And then after that, up, 2026, profitability every single quarter. And like I said, good news like this just keeps coming up. 2027's looking good. So I don't know if you guys saw this. This just came out yesterday. What did you say? Hey, hold on a second. A better keep his mouth shut on this run up. Matthew, thank you. I appreciate that, my friend. AA's not going to sell right now. He's going to wait. You'll wait for a little more recovery here. AMC, if you guys haven't seen, price targets are going back up. AMC is going to get through this last year, this last rough patch, 2026. You will be profitable. You'll be very profitable. You'll be feeling very, very good. Like I said, AMC will just need, if he asks, because he's going to ask for shares. And again, I highly recommend everybody just says yes. Get through this cash burn on this year. And again, he's not going to need to dilute maybe just the one time this year. You're going to let the stock recover. Q4 this year, you're going to go ahead and have, like I said, you should be profitable in Q4. You should be super profitable in Q1, Q2, Q3, Q4 of 2026. And at that point, when your stock is recovering, then you might do one more down the road. But at that point, like I said, it'll just be to pay off max debt, and then you'll be feeling pretty good anyways. So, yeah, nothing but good things for AMC. It's not going to shut down. It's not going to do a reverse split. Everyone needs to just chill out. But let's get to this news here. So Mark Wahlberg, Sony, Howard Hughes, they're going to make a new Hollywood 2.0 in Vegas. They got a bill there, so it's going to be up to $400 million in tax credits. Oh, hold on. What the hell? My computer's being like... There we go. What the hell is that? It was like lagging on me. So they can get up to about $400 million. This doesn't start till about 2028 is when it'll be completely in. But it's just, again, great news for Hollywood. Obviously, they're growing in this industry. It's going to be a $1.5 billion investment. Or, sorry, $1.8 billion. So it's going to be a $1.8 billion project. You're going to have 13 buildings. So it's going to, again, it's basically going to be a bigger Hollywood. They're going to give out tax credits, better tax credits, and they get a larger amount of tax credits that they'll be giving out, so that will intrigue more people to make videos there. So basically, Vegas is trying to do NVIDIA. Vegas is trying to do everything they can do to get, Hollywood over there. So they're giving them better tax credit, which means, again, everybody over there is going to make more money, so they're going to be shooting there over Hollywood. So again, this is big news for AMC. This will be more movie, more production, more films. See here, it's $80 million in tax credits, but it's up to like, what the hell is it? It's $80 million in tax credit a year, and then it gets up to about $400 million. So again, you could get about 5 years worth of it. So again, that's a big incentives to go shoot your movies in Hollywood. And again, more studios, more production, more films coming out at a time. So good news for AMC. But let's get into the classic corruption, the SEC's bullshit here. So of course, the SEC, we had that short selling rule that these big firms are going to have to start, revealing their short positions. Oh, 1 second here. This doesn't like to post that I'm going live here. Sorry about that. So the SEC, they're going to have all these bigger firms have to report their short positions, and of course they went ahead and gave them a fucking exemption for an entire year. Now they told them that they didn't have enough time to prepare, even though they've had plenty of time to prepare. So again, it's a lot of the same ass corruption you saw before in the SEC. Not really anything has changed, even without Gary. I mean, here's the problem, is you need somebody that's, you know, a retail investor, somebody who's not been in the big fucking circle that's actually going to go after these guys, not help these guys out and be like, yeah, of course I'll give you extensions because you didn't have. They've had plenty of time. Plenty of fucking time. That's the lamest excuse, and it's the new acting chairman. This Mark Ueda guy is just as big of a piece of shit as Gary was. So, I mean, it's literally not an upgrade. Dude's a fucking piece of trash. Siphon in one piece of shit, bring in the next. But, of course, so again, they went ahead and extended this rule. Classic. But there are some big changes coming in the economy here. The right side definitely won. Yeah, they're going to do corrupt shit. We're going to show you some of the corruption as well. But they're going to fix a lot of things. So the rich are going to get richer, of course, by tax breaks. But the difference is if he does do the income tax, if he doesn't tax tips, that's nothing but helping middle class. If he does go in and fix the deficit, fix the government spending. There's one thing that I want to show you that's a massive deal, and you're starting to see it now in the 10-year. And if the 10-year keeps going down, you're going to start finally seeing rates, house rates, all this stuff, mortgage rates, credit card rates, relief for the middle class. And that's what's happening in the back end. Because what's happening is when you sit here and fix all these deficits, you fix your spending, you fix your debt, that 34 trillion debt, you stop. Biden was adding, I want you guys to understand, Biden was adding, when he was in, there was over $100 billion a week added to the debt. That's insanity. Way more. It was over, oh my God, it was ridiculous. We were adding $3 trillion over a course of a year, over year by this guy. It was no joke how much debt was being added. Before we get into all this, I'll just bring up this. Since the 16th of January, if you look at the 16th of January's debt compared to today, they've added about 40 billion. In the last, since February 7th, it's kind of capped out. As you can see, they've kind of capped it out. They've controlled their spending. They've started to control their spending habits. You see, it's not really going up. It went up about, from, like I said, from the 7th of January, it went up 40, which sounds like a lot, but compared to what it was, you're talking about 40 billion in the course of 3 weeks, compared to 120 billion in one. So already the spending is starting to drastically calm down, which is exactly what we needed. Now I know they're like, we need to raise the debt ceiling 4 trillion, and a lot of people were freaking out, and it's like, and I said right away, they're either going to have to super slash or they're going to have to raise the ceiling, because the problem is there's so many problems, they're going to have to spend a little bit to fix some stuff. And then the Democrats are going to go fucking crazy about it, or they're going to have to start cutting. And it looks like they don't even really care if they get this bill passed, because what they're doing is slashing everything. And some of the things are good and some of the things are bad. And this is some of the stuff that's going to help rich, maybe bankers. This might affect us. I don't know. I'm trying to look more into this. But at first I thought this was a great thing. The White House is just deleting the FDIC, just getting rid of it. They want to just get rid of the FDIC and basically mold it into the OCC. So you basically would have one person would be running the FDIC and the OCC. They would basically merge into one company. Now the FDIC portion, after they would merge into it, so since they don't have all this, what his thing is we can get rid of a lot of these agents, a lot of this stupid spending, a lot of this and this and this, and we're going to start doing it with regulations and regulators, and we can make them more efficient. Well, one of the things, and then we're going to get into the next thing here quick with the banking regulations, because I don't know how I feel about that with the CFPB. We're going to get the CFPB for a second, because I mean, they do good things. They do a lot of good things to help middle class, and then they do some small things that do hurt middle class. So I don't know if they're really a good or a bad thing, but they basically froze them out. So they're pretty much they can't remove them without Congress. So what they're going to do is just freeze their funding and make them run off what they have, which we're going to get into in a second, which makes sense too, because they have a fuck ton of money, which makes no sense. So back to this, but they want to get rid of the FDIC and they want to morph it into the OCC, and then the FDIC portion will only focus on nothing else but insurance deposits. That's it. And all the other stuff will be handled under the OCC, and they think that they could do it with, their staff already and just morph it into their program, blah, blah, blah. So they're trying to get rid of the FDIC. But again, now you have one guy in charge, and it's just like, I don't know how I feel about this, because it's also backed by a Department of Treasury. So it morphs into the Department, a division of the Treasury, which is the OCC. So now it's like, okay, if the Treasury is now backing all of these deposits, if you do this, what does that mean for taxpayers? That's where I'm kind of like, what does it mean does that mean now the OCC, what do they need to do? What needs to be, there's going to have to be a ton of funding changes, deposits, collateral. So, this sounds like it's going to be a massive deal. But he talks about how many people there are, how much paperwork that they're doing, because there's so many people filing so much shit, so much stuff's getting lost in the shuffle. You don't need so many people going after so many things. Go after higher stuff, which I've said forever. Just go after the big guys. Just go fuck the big guys up. Just go fuck the big guys up. And guess what? All the small fish will stop because they're going to be scared of shit. If you just go after some of the small fish, they're going to roll the dice and say, you know what, whatever. But if they see you going after the big guys, they're going to say, well, if they're going to go after them, they're going to fuck me up because I can't afford the lawyers they can. That's what you do. So it's like it's a good, but it's a bad thing. Because, again, now you're putting all this stuff on taxpayers, and it's backed by the Treasury. So it's like, I don't know how to feel about that. But, again, if this leads to them going after the big guys only, this is a great thing. And fuck the FDIC. Like I said, they sit there and let these guys get away with all this underfunding, being underfunded all the time. It's like, and then they'll go and, oh, we're broke. We got enough to back all these banks, and they don't. The bank should be sitting there. The FDIC should have had billions and billions and billions and billions more deposited into them, but they let the banks get away with all this bullshit. So I don't really know how I feel about the OCC comptroller. Like I said, I don't know how I feel about it being under complete control of, the Treasury Department, but these fucking banks, they just keep digging themselves deeper into the, the system. Well, if they get fucked up, Now, the other thing that they're doing is they're currently freezing out the CFPB. Now, what the CFPB does is they go after banks. They set regulations. So when people are doing the overdraft fees, they're the people that stop the overdrafts. They're like, you're only allowed to do an overdraft fee of $5 flat rate, or it was the percent or the cost of the cost that you lost. So they can't sit there and keep doing these, $15, $25, $35 overdraft fees, and now you just pay $200 fucking in overdraft fees. Granted, obviously you shouldn't be overspending anyways, but obviously it's middle class people. Shit happens. Bills happen. Shit happens. So, they have done certain things like that. They're in charge of forgiving student loans. They do a lot of things for the middle class, but some of the things they also do that hurts them. Some of the, so one of the things that they did is they implemented a rule to make it easier for middle class, and it actually backfired. So it made it easier for middle class to sue a bank. So let's say I went and got a loan, and the bank was like, all right, maybe he could afford this, but there's more risk involved, and maybe I should let up. But maybe he could afford it. He could if he just spends right. So maybe I'll give it to him. So what they'll do now is if they give you a loan and you can go in there and be like, well, they put it to where I was obviously below this percentage and it wasn't a healthy loan for me. And now you're able to sue the bank because the bank gave you, it's not a predatory loan, but it's kind of like one. They made it a different name where it's like it's a way riskier loan than what they should have done. It's not a predatory loan, and maybe they charged you an extra percentage, but the person still got the loan. So middle class was still able to get that loan. So when they came in, they wanted to make it to where, all right, well, these banks are doing predatory practices, and that's another thing that they go after. Banks that are doing predatory practices. And so they'll look over and be like, well, the bank, you probably shouldn't have gave him this loan, and you knew that because he was pinching pennies. You knew he'd be pinching pennies. Well, now you can sue him because of this rule. So what ended up happening is banks ended up now making it way harder to give loans. They don't give loans to those people. Or those people, you remember hearing about that new rule? We need the 20% down, or you have to pay this insurance fucking cost every month on your home loan. Too many shills in here. Who's shilling, man? I don't see any shills. So now those banks, it's harder for us to get loans. So some of the things these guys do is bad. On top of that, they made it harder for, credit unions to give out short-term loans. And one of the things credit unions did is they were able to give out short-term loans because they were, it's one of their biggest money makers because they were able to give them at a less percentage than people would go get them at a big bank. So a lot of people that would need those short-term loans is middle class. Let's say a bill came, I need to go take a loan, I got to pay my rent, my check comes next week. Maybe I go get a loan quick, pay $30-$40, but at least I didn't get, my bill's not late, my home's not late, whatever you need to do. Well, the like I said, you would go to Morgan Stanley or JP Morgan Criminal Chase, and they would charge you a high percentage. Compared to a credit union, they would go ahead and give you a smaller percentage. Well, now they made some rules that made it harder for credit unions to give those out because it added a certain risk percentage to the new risk type. And of course, it made it harder for them to give out those loans. So they've also hurt middle class. And if you didn't get a student loan, you really don't care. So they're freezing this down. They found out they have 700. Look at this. They found out they have a balance sheet right now. So this government agency, and this is everywhere, and this is why I bring this up, and this is what people need to understand. The SEC. We have no money. Fuck, we can't afford coffee. I really wish Elon Musk, I pray to God, Elon Musk goes and audits the SEC. You can't afford coffee? Let's find out. Because look at this. This government agency currently is sitting on an excessive balance of $711 million. They have almost $1 billion sitting in their bank account, just chilling. And they continuously have funding, which is overfunding. They have been overfunded so much that they've racked up $711 million that's sitting in their bank account. And they're still getting funded at this high rate that they clearly don't need. Why does a government agency have $1 billion almost in their fucking bank account? That's insanity. So what they're doing now is saying, all right, well, we're going to freeze you, and you can go ahead and operate off your $711 million. You can operate off that for like 2-3 fucking years. Why are we paying you this massive amount? Or start cutting the shit out of your costs. So it's like, this is what we need to start seeing. There's so much government fucking waste by you. This is it. Like, this shouldn't be funded anymore. You have $711 million. Think about this. They have $711 million sitting in a bank account. All that government agency needs to do, buy some fucking treasury bonds. Guess what? If you buy $711 million in 5% fucking treasury bonds, pays for the government agency, doesn't it? You don't need a single penny of taxpayers, and that money's never going to go anywhere. It's simple stuff like that. How much, like I said, how much is being wasted? $711 million in their bank account? How much are they making off interest? Can the interest alone pay for this shit? That's a lot of money to be chilling. And now, and this is the other thing. Why the fuck did Biden hire 80,000 IRS agents? What? How much money is that a year? Why? To go after what? Me and you. For our $600 payments. That's not what they need to be going after. They need to be... You could go after 1,000 of middle-class people. Or you could go after one rich fucking douchebag. And you could pay for all 1,000 of those people. You don't need the 80,000 agents. You just need to go after the correct people that are suddenly not given... There are people out there that are owing like $50 million. How many people in the middle class? How many? Oh, yo, $3,000, yo, $10,000. How many fucking people do they have to go to rack up to equal that guy that equals $50 million? Microsoft. You find out Microsoft owed $1.1 billion in back taxes after they did their illegal scam. How many middle class is $1.1 billion? So you could have just went after one company or had 80,000 IRS agents go after 6 billion fucking middle class people. So Elon went in the other day. He finally walked in the doors. Hopefully he starts fucking up the IRS because you know there's fraud. He's going in there. He's looking for fraud. You know there's fraud. I can guarantee there's an insane amount of fraud. Like I said, the way you fix this country is you have to get rid of the fraud. You have to get rid of the corruption. You have to get rid of your fucking spending. You have to get rid of taxing these tax loopholes like the carried interest loophole. And Trump has literally said, I'm going to go get rid of the carried interest loophole. It's fucking stupid as shit. It makes zero sense. And it makes it so a teacher has to pay more than a CEO. A teacher should never pay more than a CEO. It's the biggest tax scam in history. The carried interest loophole is the biggest tax scam in history of the United States. You can't find a bigger tax scam out there. You can't. And they made the fact that they made it legal because they went ahead and lobbied and they paid a whole bunch of money to fucking corrupt politicians through bribery. It needs to be abolished. How much money? Listen, how much money just abolishing the carried interest loophole, just abolishing that, and now making all these CEOs not get their compensation in fucking shares, but make them pay that through income taxes? The massive difference there makes up so much money, it is unbelievable. And now you can afford to give the middle class less just because suddenly the fucking rich are paying what they should have the entire time that we've been paying the same fucking percent. They should have been paying the same percent as us. Not had, oh, let me just go get this in stock and then pay fucking, make it not, or let me just get $10 million in stock, not go ahead and take it out for a year. But then I'll go and get a loan and use that as collateral. So now I'm going ahead and I just go ahead and get a loan out. I'm rich as shit. I get to live off that money. And then all of a sudden, guess what? Instead of paying what we're all paying on massive income tax, state tax, he doesn't pay state tax anymore. You get out of paying state tax and you get out of paying capital or income tax. And you pay long-term capital gains tax of 13%. Only a flat rate. They pay a flat rate of long-term capital gains tax. That is the carried interest loophole, so they don't pay state tax or they don't pay income tax at all. It's a fucking scam. It's a joke, and it needs to go. They need the IRS looking at. You could go attack 10 fucking companies and make billions of dollars back, or you could go, like I said, waste how much money going after all of us. Like I said, what is changing in America is exactly what needed to change the whole time. I don't care if you're, like I said, I've never been a fucking Democrat or a Republican. You've seen me this entire time. But every single thing, if you've watched my channel for 4 years, everything I've ever said with politicians, we need to go ahead and fix the 10 rate. Trump already talked about fixing the 10-year. Or sorry, the 10-year rate. Trump already said, I'm not going to give a fuck about the feds. I'm just going to fix the 10-year rate myself. How do you do that? You fix the debt. Well, guess what? He's controlling the debt, and he's fixing the deficit. And he's tariffing fuckers that are not allowing us to fix deficits. Well, then he'll tariff you, and we'll fix it that way. Now we're not losing money. Now, if he comes out and says they're going to do a type of... Here's the thing. You don't need to forgive student loans. You need to fucking fix the practice. They need to fix the practice of it. The percentage. Cap them. You need to fix the cappage of them. You need to fix college rates. You need... The fucking commission of colleges is the most outrageous thing in the world. It's the most outrageous fucking thing in the world. Other than healthcare. I showed people this today. The government just came out and said, for one bag of saline solution, which is salt fucking water, it costs them $1.07. In a hospital, they charge around $95 for that bag of solution. They have a 93% profit margin on that bag of solution. Think of how insane that is. What the hell's the percentage of that? They get a $900 billion markup. Everywhere else in the world, that shit's capped. You can't fucking do that. But they can in the hospital. That's why healthcare, like I said, healthcare, I need to get fucking insurance so I can still pay $10,000 on this shit. Like I said, it's insane. You have to get fucking automotive insurance. Why? Shouldn't it be my choice? I thought it was a free fucking country. If I get in an accident and want to cover it myself, that's my fucking choice. Why do I have to pay insurance all this? If I'm paying insurance to go to the doctor, why do I have to pay this massive fucking bill as well? Shouldn't the insurance fucking cover that? I mean, I know they do to an extent after you pay a certain amount, but like I said, it's like, Jesus Christ. The scam is unbelievable. And if you don't have insurance in the United States, good God. Good luck to you, man. Like, good luck. You break an arm, you basically bought a house. Like I said, it's insane, dude. But this is how you start fixing shit. You stop hiring more people to go after middle class and going, hey, we need to hire 80,000 more IRS agents so we can hit 80,000 more fucking middle class. No, just go after the big fuckers. Simple. Said it for 12,000 years. These corrupt agencies, get rid of them. If you have an agency sitting on $1 billion, they don't need any more taxpayer money. They don't need a single fucking penny ever again. Again, go ahead and walk into this agency, take that money, boom. We're giving these fuckers how many millions and millions and millions of dollars? Get rid of it. It's corruption everywhere. And now that you're seeing the corruption, you're seeing the debt be under control. You're seeing them go after the corruption. What's happening? Look at your tenure. Your tenure. Here's 10 years going down. So basically you had fucking Biden up in here. Fucking rocking 4.7s. Trump's going after shit. He's attacking this. He's attacking that. And boom, boom, boom. We're going down. Because why? When your government attacks their debt, their deficit, that means that there's less risk involved when I go ahead and buy these bonds. There's less risk of a default. Why? Because if you're turning profitable, what are the chances you're going to default? If you're not borrowing at such a massive ass rate, if you get your spending under control, what are we worrying about? Nothing. You can go ahead and get these down. When the world was at its best, when everybody could go get loans, guess what? We were down way here. Wait, this is like, oh shit, sorry. This is the, here you go. $2020, everybody was thriving. Everything was going great. Why? Because your treasury rates, people were getting fucking loans, 2%. Everybody that got a 2% loan. What is the only difference? Look at the graph. What is the difference? This should tell you everything you need to know about how they can fix it for the middle class. It's that simple. It's right in front of you. The data's right there. The picture is right in front of you. When you fix the 10-year, that means I get a 2% mortgage rate. When you fix the 10-year, that means I have a 2% car loan. When you fix the 10-year, that means I have a 10% credit card rate, an 8% credit card rate, not 25 like you do now. You've seen the path. It's very simple. Fix your debt, fix your deficit, fix your spending, fix the risk attached to your tenure, and now your entire country can thrive. It's been there right in front of our faces. But COVID came, printing came, we're up to $34 fucking trillion, and look at this thing. Boom, 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 boom. The next thing you notice, look where you're at. You're at 4.6. We got up to 4.7%. You're up to 7.5% fucking mortgage loans. I've seen people at like 15% car loans, which I'm like, what in the hell? You'll never pay that off. You're gonna pay like $4,000, $6,000 extra dollars, $8,000 extra dollars. Some of these cars are like 30 grand. So this is what we need to start seeing. This should be our focus. If we can get this down to this level, you will start seeing those mortgage rates at 6%, 5%. You'll see the relief we need. This is what we need to do. Again, just keep fixing these type of things. Cut, slash all this shit. I watch the Department of Doge every day on their Twitters that they're sending all their posts. I mean, dude, they're slashing some shit. Of course, I'm not saying they're, oh, yeah, the perfectest thing ever. Of course, corruption's going to be in there. Of course, they're going to keep giving. I've already shown you the tax break shit with the corporation percentage tax cuts. Of course, they're going to get the rich richer. But what they're going to do is get your middle class richer, which again will re-stimulate your economy, which is what you fucking need. You need your working class to stimulate your economy, and that will pay through taxes. And guess what? When they have more money to spend, they will buy more things. That's what middle class does. Guess where that goes? Right back in. You don't tax people's work. You should not tax people's work. You tax their spending habits. If you want something, you want something that's super nice. And if you want something that's super nice from another country, pay the difference. Make things more luxurious. But hey, everybody's got more in case. The people that want to save, you can now save. The people that just want to buy food and eat food, there you go. Is it going to go hard for a little bit until certain tariffs and everything, agreements start to get reached, settled down? Of course. But for in about a year or two, you're going to start seeing the economy, I believe, massively be better for the middle class. Discord link? Yeah, give me 1 second here. All right, for the Discord link, here you go, my friend. But again, like I said, Biden, this shit was out of it. They didn't care. They just fucking spent. Like I said, they're going to try and give Trump a bomb. But he's actually, look at our deficit. We were running a $2.5 trillion annual deficit. 2.5 trillion annual deficit. Wonder what could be going wrong. Then you have Powell. We're on an unsustainable fiscal path. You think? You mean running a 2.5 trillion annual deficit isn't fucking, it's not sustainable? You mean countries can't do that? Then why the fuck were you guys doing that? Look at that. We're already in the first 4 months of this year, already up to 2.5 trillion. Thanks for the parting gift, Biden. Like I said, if people wanted to sit there and act like that guy was good, the guy was a piece of shit, dude. The only people that like him were the people that got their student fucking loan forgiven in the nut fucking jobs. The guy was a piece of trash, dude. Trash, dude. Like I said, we have to fix these things or the United States is going to have a lot of problems. On top of that, Powell's over here bitching about all this other shit. Look at Powell. The Federal Reserve has busted through. They are negative $222 billion behind in debt to the Treasury. They owe this to the Treasury. They, in the history of the entire time the Treasury's ever been built, have never owed over like $5 billion. They owe $222 billion. On top of that, they're losing money every fucking day. They're still burning money at the feds. How ridiculous is it that the Federal Reserve, the people that control money, is losing it? So the Federal Reserve, like I said, the Federal Reserve is a piece of shit. All they do is print. And what the Federal Reserve is doing, because I want to show you this, because you can see it right in front of your face. See it live it. You're living it. You can watch it right in front of you. What the Federal Reserve is doing. So you're getting these repo markets where we're going to get into the repo here in a second, and these treasury buybacks. So we've been trying to do treasury buybacks. So they've been, the treasury's been trying to do, a little QE, trying to do some treasury buybacks. Nobody has money. Banks, all these guys, hedge funds, they're getting close to getting fucked. If you look here, Federal Reserve is negative $220 billion. They're hurting worse and worse. So the Fed are now they're hurting, okay? The people that are backing them up, the people that have been bailing all these guys out. So what the Fed is also doing is I'm going to show you why the Fed's going to be hurting even more. And it's just beautiful to watch. So what else the Fed is doing is the reason the Fed, the Treasury, everybody's trying to back it up, blah, 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 is when there wasn't a lot of demand for treasury bonds by other countries, what's happening is the Federal Reserve will buy those bonds because they can create fucking money. So it basically creates an inflation tax that you don't see. And then they buy the bonds back. And if they lose money, which is what they're doing because the rates have been high for so long on those bonds that they're losing money, it hurts me and you. And listen to this.
The Treasury Department has deficit spending, so they put out all these bonds that they're selling, and if the public won't buy them, the Federal Reserve will buy them because the Federal Reserve can legally print its own money. So it's no problem for the Federal Reserve to buy them. It's just that's what that amounts to is one, inflation, and two, it amounts to a hidden tax, which will not be confined to the rich, as they call it. I mean, in other words, if you've got X thousands of dollars in your bank account and the Federal Reserve starts printing more money, it is simply stealing the value of the money that you've put aside. Mm-hmm. Mm-hmm. So that's the same thing as a tax, only it's an inflation tax.
So the Federal Reserve is just constantly fucking us. Like I said, the fact we don't need the fucking Federal Reserve. The Federal Reserve is the biggest fucking scam in the history of the fucking United States. It needs to go. All they do is fuck us to save the criminals and the banks. And the banks sit there and do more criminality because they'll get away with it because they'll always be backed by the feds and they'll always be backed by bailouts if the feds can't. Or the feds will create a brand new system to print and create more money. And when he said it doesn't affect the rich is, well, of course, because now that means the banks get all this money and the only people they'll get the loans to and the more liquidity to are other rich people. And it'll make it harder for me and you to get loans. And meanwhile, our money's value has lost it, while the rich still get all the new incoming money, so they don't care about the value that was lost because they inherited more than us. And that's what he means by the rich not losing it, but me and you do. Now, Powell comes out after I told you guys he shouldn't have done the inflation because he's a dumb fuck. And he says, well, core inflation jumped up to 3.3%. Of course it did, you stupid fuck. And it's going to keep jumping because now you just re-added to the problem. You raised it to stop this, and then you just fucking recapped it down to add to the same problem. Corporate spending, banks not paying us enough, and middle class not having money. That's all you did. Good job. You made the rich and corporations have more, and you made banks pay middle class less in their bank interest. Good job. So now core inflation's back because you're a fucking idiot, and we're still, like I said, I can't stand this fucking idiot. So now they're saying there's no more rate cuts the rest of the year. On top of that, this shows you right now with the Treasury bond and everything that I was getting into. This tells you how bad these banks are hurting. This tells you how bad hedge funds are hurting. Everybody needs liquidity. So the Treasury comes out and says we're going to do bond buybacks. We're going to, because remember we were showing you guys that the Treasury said they're going to start doing bond buybacks. So we showed you that in the beginning of it was the beginning of last year. They announced that this year they were going to start doing Treasury buybacks. So they go ahead and they say, what's the demand for buybacks? And usually when you see that, that's people going, all right, I need liquidity. I need money. I need, capital. I need collateral. I need this. So when you see a lot of demand, that means a lot of people are coming. They're scourging for liquidity. They're scourging because they need collateral. They had $28 billion worth of people coming screaming, hey, I need you to buy this back. I need this buyback. I want to buy back now. Buy this. Will you buy my stuff? The Treasury only accepted $4 billion. So that means $4 billion worth of people got their liquidity, and you still have $23 billion worth of liquidity people are scrambling to find. Okay? They're looking all over for it. Well, look at this. This shows you exactly what I'm saying. This shows you that I'm right. They're hurting. Not only does this show you that, I told you guys 4 months ago that money market funds are now the main ones starting to invest into treasuries. They're the new investors. It's a lot of these money market funds because that's where tons of money has been going. And I told people, 2 years ago, get into your money market funds and you would have been killing it. If you had all your money in a money market fund instead of a bank account, congratulations. You did great. You made a whole bunch of interest. You did a lot better than if you would have left it in that bank. If you bought gold, you're killing it. Said we're doing some stock plays. Guys, don't just sit there. When you're sitting there, you're losing. I'm not saying just go fucking gamble, go do stock plays, but not learning. If you don't want to learn the stock market, just take let me ask you this question. How many YouTube videos a day? How much time do you spend out a day just sitting there on Twitter, just looking at shit, bored, just trying to find something? Go watch, just take 10 fucking minutes one day, one time. Find a couple ways to invest. You don't have to do it in the stock market. You can do CDs, you can do gold. There's commodities, gold. There's tons of areas where you can go, you know what? Maybe I'll just put this money over here, the money that I would have set in the savings and just let it sit there. Maybe I'll let it go over here for a little bit. Maybe I'll put this in, there's high grade investment. There's tons of things you can do. Just go look at a whole bunch. That 10 minutes, that 10-minute video that you could go watch one day, one time while you're just bored, could make you so much more. It's stupid. And it's that simple. And I know it's not. It doesn't sound fun. It'll just take you one time. And then that one time, maybe if it starts working out, you'll feel better about it. Now, again, when it comes to, trading, last time we went over all these indicators and stuff. But like I said, I'm trying to get motivated enough to do my next video. I'm sorry, I know I'm taking a long time on the charts video, but it's like even just in between learning, charts, learning point of control, volume point of control is there's tons of indicators you can learn, but this shows you where the big guys bought in. This shows you where the mass levels of the big guys were buying it. Point of control. Usually when a stock goes below a point of control, and you want to sit there, you don't want to just look at the 1 minute chart, you know what I mean? You want to go ahead and you look over, the daily, watch that point of control, see if they line up, you know what I mean? See where they average around, because, that's usually when it always helps to know where the big guys are buying, when their averages are, when they equal around, if the price is below it, because those toots aren't going to stay, underwater long. They'll buy back and they'll defend their position. So point of control, there's things that, things to learn. There's tons of things to learn. You got your support. There's tons of things to look at. We'll get into this. I'll show you the breakup levels. We'll show you Harambe's. I'll show you head and shoulder pattern. We'll get in all those patterns here, but it's like, I show people the indicators, and some people are like, yeah, I've been trading on indicators and it helps. It does help, but don't do them alone. Don't do them alone. Indicators lag. They're not perfect. They lag. They can be deceiving. So make sure you match it with everything else. Again, you don't need trading views. You don't need to see this. I'm a visual learner, so I like to see things like that. And then learn as I go. So, I can chart these without the indicators. But it's like, there's tons to learn. Never stop learning is what I'm getting at in the meantime. Because if you're just sitting there, you're losing at this point. Because I said everything's built against you. The system tells you, take your money and go put it in a bank. So then that bank can go fucking steal it all, put it into other shit and derivatives, and make money off of you. Make money off of your hard work. Just like I said, just don't play into the system. Fuck the system. Now, this is what I'm getting excited about. So I told you guys there was about 9 money market funds that were added for about a total of about 17 money market funds. I figured they had about 35. Everybody's asking me, like, when this hits 0, what happens? I think when this hits 18, when this hits about 18, you're going to see around 35 billion. Okay? That tells me banks are out. That means money market funds are going to be the main people in the repo market. Oh, yeah. That means banks no longer have all that excess capital. Shit could be getting very, 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 very spicy. Very spicy. Discord link's right above Frog. Discord link's like, it's in the chat, man. It's right at the very top of the chat. But just click on the link. If the link doesn't work again, just let me know and I'll just repost it. But again, this shows me that, guess what? They're running out, and they're running out hard. You're getting less and less participants, and why this matters? This hurts the Federal Reserve. The Federal Reserve was making money off giving all those guys, because the Federal Reserve would then take it, park it in overnight index funds, and make a killing on it. This means the Federal Reserves are going to be making even less, which means this deficit that the Federal Reserve is currently running to the Treasury Department is going to grow at a faster rate. So the feds are going to be broker and broker and broker the lower this goes. Great news for us. So again, the people backing the banks are now hurting, which means the banks that are going, I told you guys, these are what you need to start seeing line up. The Fed's getting fucked up. Well, guess what? The Feds are fucked up. The commercial real estate bomb coming into play. Well, guess what? The commercial real estate bomb's coming into play. On top of that, you need to see banks having a liquidity problem. Guess what? Banks are having a liquidity problem. So that means they're going to have to start going on contracts. They're going to have to start going into the derivatives and start recalling on some people. Hey, I need more collateral. Hey, I need this. You're going to have to, hey, these contracts that I said you could get away with, you now need to pay up. That's when you start to see your move. Again, I'm not worried about AMC. I'm not worried about any of these. You said, guys, it's going to get harder and harder for them. And if your money's in the right place, it could get ugly for the United States for a little bit. And if your money's in the right place, like I've told you, gold, silver. I mean, I'm not going to say the certain stocks, but certain stocks that we've gone over that, I've said these would be safer in a crash type area. You're going to be feeling good. CDs, treasuries. Get the treasuries while they're up. Get the percentages in while they're hot. You know what I'm saying? Money market funds. There's places to go. Because when some of these banks go and the FDIC is fucked up, guess what? You're not going to get your money back. So hopefully you're in those. If you are in a bank still, hopefully you're in a credit union, as I went over before. But again, look at this. The Big Three Vault. They're buying gold at the fastest rate in history. Look at this. Look at this spike. They're buying gold at the fastest rate in history, and the price hasn't even caught up. I told you guys, gold is it's where you'll feel safe and warm forever. It's just going to keep going. Listen, fiat is a scam. The only way that they can get out of their scam debt is to start buying gold and start backing their shit with gold again. So it's never going to stop. And guess what else is happening? There's a shortage in gold in all the banks. I told you guys when gold was at $1,458 and then at $1,600. Get in now. It's going to cross 3,000 next month, and it's going to keep, and then it's going to fly. You have to remember, all of these pieces of shit banks have gold shortages as well. There could be a squeeze in gold, and the day that a gold squeeze happens, oh my goodness. If you're in there, you're feeling beyond good. So again, guys, I mean, you're talking you're talking a lot of money that could go up on a gold squeeze. Again, we're back up. It's up to 2,900. You're up over 1,200 if you first started getting, 1,400 if you first started getting into gold when I talked about it. Feeling good, man. But gold tells you that story. Gold tells you that story. People are losing faith in fiat systems. Money, if it's not backed by something other than just a corrupt government, how much is it really worth? Ask yourself that question. If that government's in debt, if that government's trillions in debt, how much is their fiat currency worth? I told you governments are at 106.84 trillion in debt. 106.84 trillion in debt, and it's growing by the day. This is your safe haven, and you will always feel warm and snuggly. Now, credit card debt has reached an all-time high. I showed you guys we were just... Listen to this, because this is disgusting. This is scary. We just broke $1 trillion a month and a half ago. We just broke $1 trillion a month and a half ago. Credit card debt now, 2 months later, or a month and a half ago, is now up to 1.21 trillion. In a month and a half, the middle class has added over 200 billion in debt on credit cards. I told you there's 2 ways to conquer and enslave a nation. One is through the sword, and the other is through debt. You're enslaved through debt now through these companies. 1.21 trillion in debt for people. Eventually, like I said, this shit is getting insane. Now, I want you to look at this because this is scary. You now have 1.21 trillion in debt for middle class. Look at this. Shares of credit card holders making only the minimum payment is now at an all-time high. We have 1.2 trillion in debt and people can only make the minimum payment. If you have a credit card, if you've ever had a credit card, what happens when you make the minimum payment? Do you ever get out? When you make the minimum payment, do you ever get out of debt? Or does it instantly get ate up by the interest? So you have basically recycling 1.2 trillion in debt and people in a situation that's getting worse. So you have a bomb coming in the United States. You have all these people that cannot afford these mortgages. You have the commercial real estate bomb coming. You have auto loan delinquencies. Here, let me give me 2 seconds. You have auto loan delinquencies at an all-time high. I can't find it here in a second. I'm just going to here. Auto loan delinquency rates hit the highest level in 14 years. So people are you got defaults on credit cards. They're maxing them out. They're only able to pay small amounts. The amount is growing 200 billion in a couple weeks. It's getting very ugly out there. And eventually, like I said, you're going to start to have defaults across the board. So again, guys, I hope everyone's out there being smart. I'm not gonna worry about Powell anymore. But again, guys, another play today. We missed. And it's an event trade. I like to talk about event trades, and I always say look for events. Here was an event today. I posted this right at 9 in the morning or 8:30 in the morning, 8:37. Right at open, NVIDIA just released its 13F. The company added blah, blah, but it removed Sound, Serve, ARM, and NNOX. All of these stocks dropped by like 40% today. They all had massive drops. If you were watching, this was a huge opportunity for puts. Event trade, guys. People that don't know TA, look for events. If you see something like this, you know those stocks are going to drop. Play the event. Event trading is very, very profitable. I'm telling you right now, if you get an event trade right, news will out-trump any single chart setup, or it will destroy it. I don't care how spicy something looks. If the news gives the opposite direction, that's the way it's going to go. So make sure you're always, like I said, guys, always trying to look for trades. Don't just go blind in. When you I really do want to do a video here. I do want to do a video. So, but it's like, here's the thing, guys. If you followed my indicators, okay? If you followed my indicator video, you don't have, I'm not saying go spend money. You don't have to go spend money. But I want you to understand something. When it comes to the stock market, that's all these guys do is spend money. They spend billions of dollars for data. I will always post my data. I have my indicators. You can come on. They're public. You can come on. I'm not saying go buy TradingView, but if you got TradingView, I have public indicators. You can go on and you can make your chart look exactly like mine right now. Just click on it. Just type my name in. Like I said, I'm not saying going to buy it, but it's like don't be afraid to spend $20 for a month and then come on here and just go, all right, what am I seeing? You don't have to get the 50 indicators. If you want to learn TA, you don't need to set up with 55 fucking indicators. You can get it with 3, get it with 5. Get the base setup. Do the correct 4 indicators and you're good to go. You can do candlestick patterns. There's indicators where you can do just candlestick patterns. Pull up Harambe's. You can look for certain things, okay? And I can at the bottom of this video, if I get enough comments, I'll go ahead and post indicators, just for chart indicators. And then watch what you see. Learn. Watch them happen visually live. Go take 10 minutes and learn a TA video. Just do candlestick patterns. Just do setups. Just do volume charts and TA candlestick patterns. Take 10 minutes and then go watch them live. And by watching them live, you'll start to see them. You'll turn them off, and then you'll see. I have one side of this. I have all my indicators, and on the other side of this, I have the exact same setup with no indicators. And then I draw the lines to make sure I see the same shit. If I'm going to invest, I want to make sure I'm seeing everything the same way. Because some guy drew some of these indicators. I've changed them, but my formulas aren't going to be 100% correct. Every equation is going to be off a little bit different. Just redraw it after and make sure your patterns are right. It's simple. But when you see things live, a lot of people are visual indicators. I made all of these public for everybody. Volume indicators, option indicators, what you want to look for. If you just want to look at a chart to chart it, these are all public for you guys. They're all public. So you have all 3 of these all set up. But just look at what you want to look for. So all right, let's just look at a quick chart okay? Let's just look at a quick one here. Some of the things I'll look at, obviously, here's the thing. Like, when it comes to options trading, when it comes to trading all this stuff, you got to know which chart to look at depending on what type of trade you're looking to do. You know what I mean? So if you're looking to do a short-term swing trade, maybe look out for a week. Maybe look out for 2 weeks on an option contract, okay? What you want to do is you're going to look out for the weekly. Look out for the month. You could take a quick gander at the month, but look out for the weekly setup. What's your weekly setup looking at, okay? Look at your indicators. Pop on your chart here, see your channels. Oh, hold on. Hit the wrong one. Like we went over before. You see, watch your Bollinger Bands. Always watch one of the key indicators to me, always, is your Bollinger Band. Turn it on, turn it off, okay? You're going outside of your Bollinger Band here on GER. So what you need is, to have a high, so you can kind of see what's happening. You need to have high volume days. Why do you want to have high volume days quick? If you have a couple high volume days, you're going to expand your Bollinger Band. Stocks do not like to trade outside of Bollinger Bands. They don't like to trade below Bollinger Bands. If you're below your Bollinger Band, that's a perfect time for an entry point. Because you go, all right, if I'm below my Bollinger Band, unless you start seeing mass volume. If you start seeing, let's say I'm below my Bollinger Band, okay, and you start seeing mass volume candlesticks, okay, your Bollinger Band is going to expand. But let's say I'm going below the Bollinger Band and it's not high volume. The Bollinger Band is not going to expand, which means your price is more than likely, and it almost does every time. It's a very good indicator. Every time it's going to pull itself back into the Bollinger Band. Okay? So when you see charts like this, look at your Bollinger Band setup, okay? Look at your RSI. Am I overbought? Am I oversold? I like to use Stoch indicator more than I like to use RSI. I feel like when you see your stock indicator in oversold territory, you almost always get your rebound, especially when you see the bullish cross signal. So like right now on GUR on the weekly, you're seeing a bullish cross signal. Now again, now you want to look at your EMAs. You're above your EMAs. So you're above all your EMAs. You're above your 200, you're above your 100, you're above your 20, and you're above your 50. Those are all bullish indicators, okay? So you're looking over going, all right, for the weekly setup, I'm above all my EMAs. I'm breaking out of the channel, which means you're going through your resistance, which means that you're going to change this into a support ascending channel, which means, all right, on GUR, this is why we got GUR calls. Well, also Collins, thanks. That was a great call. We got GUR calls today, and it was like 24.90. It was we got a sniper call today. That was lucky. But again, you see the weekly thing here. So again, you're almost oversold, but your stock, your RSI is getting towards overbought, which means you might have had a pull. You might have a small pullback. Well, that's what we did, and then we bought during that small pullback. Your Williams percent is now positive, and so is your MACD. Well, if your MACD is positive, your histogram is positive, so sentiment is still positive on the stock. This looks like a great weekly setup. We got calls. You want to look at your theta, your delta. So, come look at the daily setup. Again, check your Bollinger Band, check your setup. So you were oversold on it. You can expect, you're not going to bust into the 30 range. If you hit the 30 range, you're going to hit your Bollinger Band, and you're already oversold. You're getting towards double oversold, which means, again, you might have a small pullback. It might cool down on tomorrow. We'll see what happens. But again, if you're looking for a weekly trade, you got to know what type of setup to look for. And then on top of that, you can look up your charts, pull up your patterns, look at your point of control. You want to see the point of control. The point of control, what that does is it looks for the volume, it looks for the biggest volume on that stock. And then it looks for the entry point at that. So basically that can show you where the big boys bought, because the big boys are the ones that end up moving the needle. It's not retail, it's the big guys. So what this does is it shows you the point of control on where the big guys bought. So again, let's say on the hourly, you're on your hourly here and you're below your point of control, you can assume it's going to go back up, either that day, next day. Institutions are not going to be below. They're not going to be underwater very long. If they are, they're going to buy back to get back above their point of control. So there's a lot of things to learn in trading. But it's all something that I promise you can learn this in a matter of a couple of weeks. It might look scary. It might look hard. You can even, if you don't want to, like I said, go and get a trading view. Get whales. You don't just look at the chart setup. Look at whales as well. Look at the options flow. But like I said, data is always great. You can never have enough data. So now, let's say, all right, my setup's great here, okay? Setup looks great. Let's just pretend for now, GUR, you want to come over here, you want to pop over here, check out the flow check out the flow. I always like to do, what are the big guys buying? I care more about the big guys, So let's say I'm trading weekly. I'll come over here, I'll pull up the flow. I'm going to look for call options that are towards my date, towards these 135s, are 35 days out, 17 days out. 7 days out. Are these bullish? Are they bearish? Because those are the ones that are going to more affect the price movement during the time period that my call option is. If I have a long dated call option out here, I'm going to look at these other guys as well. What are these big long call option guys looking at as well? So, there's so much stuff to look at it before you just hit buy. Today, Serve was perfect. Serve was a perfect example today. So, Serve, I knew was, first of all, we bought on the downfall. We bought Serve, it was about $12.98 when I got my contracts. If a stock plummets like 50% just off news, but their financials are great. The setup's great. Everything was great before that news. And then you see all of these setups. Dude, the minute setup, it's changed now because you had overbought. But when you saw this down here, you saw the setup, the indicators. You saw it right down here. This is right when we bought around. Oversold territory. You saw on the Williams percentage, it bottomed out and it started to come back. Your Williams percentage is your only live indicator. It does not lag. At the time, though, what we saw was the MACD also flattening out, and we saw the sediment going from red to green and lowering and getting back towards zero. So you had to assume at that rate you would see a bullish indicator on the cross. You had your cross come back up. We saw our patterns. You saw your bullish engulfing. Boom, you saw your breakup candle. Boom, you broke through the channel, and guess what? There you were. You're back in. You go back to your hourly. We're still riding the Bollinger Band. Now, if I was going to say, unless you had an increase in volume, 1385 was where we were going to stop around. You were about to come back into your Bollinger Band. Do you see where we're looking? Now, on top of that, you're coming down here. I'm sorry, I was looking at that backwards. I'm sorry. I got completely messed up. You saw you're riding the bottom. This is what I meant to show you. Not to forget what I just said about the 13. You saw down here, you're riding the bottom of your Bollinger Band, okay? So you are riding the bottom, which tells you it's probably going to cap out around this area. Perfect entry point. Now you're bouncing back off the bottom of your Bollinger Band, and you're coming back up into the channel towards your support channel. So there's tons of ways to read these charts. And again, if you're in my Discord, I will always help you guys. But hopefully just by watching me read that and showing you guys, like, you can see entry points. That's why I tell people, like today with Mogul, MGOL. There were so many people that bought that stock, made a ton of money. I told you guys at 115, I'm selling. I'm going to sell after reading all this stuff. It paused. It got halted. You guys had tons of time. It went up to 124. Still had time to sell. And you don't get attached, guys. Listen, if you do a options contract, and let's say the next day it runs up and you're up 100%, you have theta and shit to worry about too. Don't hold it for 2 more days, 3 more days to try to get the extra 45, 50 cents. It got ate away, and it got ate away from your theta. So if it runs up, don't be afraid to go ahead and, all right, I just hit 80% profit in fucking 1 day. I can re-enter on a pullback. Just because you like the stock, well, you made profit. So on the next run, you can afford it on the pullback, so you can afford the next play. You guys, here's the hardest thing to do as a trader, as an options trader, when you're making money. And when I stopped doing this is when I started making money. When I made 80%, when I made 20% in a day or two, I got the fuck out. I'll re-enter. I don't give a shit if I don't need it to hit the 3, 4, 500%. If I do, if it does, sweet. Unfortunately, I missed out on some money, but hey, I also have enough money now for on the pullback. I can buy an extra contract compared to what I couldn't before to make up for what I lost on the next pull-up, on the next play. The hardest thing to remember as an options trader sometimes, there's 8 million plays in a day. Don't be focused on one. Don't let green go to red. It's the hardest thing to do. Setups might look great, but selling into strength on contracts, you get the extra percentage. Selling into strength is always better than trying to cash in on weakness. Always. Don't forget that, and you will be a lot more successful. Like I said, I'm starting this Discord. Tons of people. If you're listening right now, and you are a Twitter follower and you don't want to do Discord, that's fine. I do a $5 whole sub wall. $5 whole sub wall on Twitter. I am no longer, listen everybody, I'm no longer going to give free plays on Twitter. It is DMs like this up the ass of people complaining to me. People got in, or they'll get in at, I said I'll buy back in at 99 cents, but yeah, I bought in at profit. I can buy back in at 99 cents, and I only ended up buying like 50 shares like I shared in my Discord. But at first I had 1,700. So it was a big difference on me getting back in. I said I'm going to buy back in a small amount on just in case it goes crazy. You never know. I'll take the risk now that I have it for profit and it's on the house. Trading strategies are always different, but when I buy a call, I don't even announce it. I announce it first to people on my Twitter. So if you don't want to try to learn Discord, I announce it to people on Twitter the second I buy it. I'll show you why. I'll show you the setup. You don't even need to do anything. You can just look at what I'm seeing, and I'll tell you what we're doing. I'll tell you what I'm looking for. I will explain it all, and it's $5. $5. Why? Because I'm done with trolls. If you're going to pay the $5, you're obviously there to try to learn, and you're there to try. You're not there to come bitch at me. You get that there's risk involved. Like I said, I'm done with people on Twitter asking for handouts, and then they'll make money on like 5 plays. They don't even say thanks. But then the one time they miss and they lose $30, I get an earful for 70 minutes by 20 accounts, dude. That we're green and we're loving it, and then 20 minutes later they're red and fucking going crazy. I cannot sell for you. I'm not your financial advisor. When it comes to MGOL today, I literally said I'm selling. I can't be any more clear. And then I said I sold at 115. You could have sold at a higher price than me when it went to 124. I'm not your financial advisor. You're not paying me. I'm giving data for free, and I'm trying to teach people so you can learn how to read data without me. How is that a grift? In any way, anyone that calls me a grifter, I'm trying to teach you everything so you can go learn on your own. And then I'm giving you free stuff in between. Like I said, I don't ask for shit. You ever want to say thanks? Go sub for $5, and the $2 that I get will go towards Little Bigum's fund. I don't care. I never ask for anything. If you don't want to, don't. I don't care. I want us to win. I want middle class to win. I'm one of the only people you'll ever fucking meet that genuinely wants you to win. I see how corrupt the world is. I fucking live in it. I have a family. I know exactly how you feel. We all just want to support our family. We all just want to have a good life. We all just want to go to just be able to go to a fucking job and be able to come home, have food on the shelf, not have a bill behind, not have to rely on fucking credit cards like this and just be happy. It's all you want to do. And I want that for you. The more of you learn, the more of you can come in and help me. I have 2,500 members in this Discord. They all join for free. They're all playing for free and they're all learning for free. 2,500 members. And I just gave out the link again. Again, if you think I'm grifter, you're fucking retarded, dude. What more do you want me to do? If you just whine about AMC, grow up and move on. AMC at this point, you're waiting for everything I've told you to do. That's it. Chill the fuck out. In the meantime, you could have made thousands back by trading. I'm not saying I hit all the time. Look, and here's the thing. If I'm wrong, I admit it. I'll tell you it sucks ass. I'm sorry. I think that I fucked up. If you can take any kind of money out, take it back and we'll make it up. I will always say when I fuck up, I fuck up. The setup was there, something happened. It just didn't fall through. It happens. I will tell you as soon as I think that it's fucked up on the sub-train thing because you pay me. So even the $5, I feel a little responsible for every fucking trade. No one else that you pay or you join their $100 Discords, I promise, give a fuck. They want your $100 and they want to pay for their trades in case they lose. That's what they want. I want us all to fucking win, dude. When we all start winning, we can all go ahead and, like I said, retail could be the biggest hedge fund in the world. We just got to know what we're looking at. There's nothing out there that says that we can't have a giant community Discord. People look at a chart. all look at a chart together, post the chart, look at the data together and agree, hey, this is a fucking great setup. What is illegal is we all go, hey, let's try and short squeeze this stock. But there's nothing out there saying, hey, 3,000, 5,000, 10,000 people that like a stock can't pile the fuck in together because they like the setup, but we can move the mountain that way. But I got to get going, guys. Thank you guys for listening. Again, if you're not in the Discord, jump in the Discord. Hey, thank you for that $2 super chat. Again, any super chats, I always appreciate it. Go straight to Little Bigum's fund. Goes right into the diapers. Those get expensive quick. But again, for the Discord, guys, I have, just so you guys know, also too, I am sponsored by Whales. I am sponsored by Whales, Unusual Whales. I will, again, if you ever want to say, all right, I'm going to take $50 this week. Maybe I take $50 of my profit. I'm going to learn. I'm going to take Bigum's discount code. I'm going to go and buy Whales. My discount code is Bigum's. You get 15% off. It costs you like $30. You will be able to make a lot of money if you start to learn how to use Whales. And it's just like anything else, guys. And I'm not saying go buy it. You don't have to. In my Discord, I created a channel for you guys right here. It's called the Bot Event Discord. You can it's 8 times an hour. You can ask this bot. Whales was kind enough to give it to us. You can ask this bot for options flows for tickers. As you guys can see, my Discord uses this. We also created a secondary bot for events. So if you want events, if you want events, you can ask our event trading bot, or you can ask our Whales bot. You can ask about Congress trades. You can ask charts, flows. You can do all of this for free. You don't have to. You don't have to spend it. But if you spend it and you DM me and say, hey, I bought Whales, I will take time with you, and me and you will go into a trading thing, and I will teach you how to use it so you can come back and show me flows that I'm not seeing too. Because here's the thing. Let me give you an example quick before I leave. Because there's tons of people that will post tons of money, hey, look at this. And it's like, dude, you can see. All right, here you go. Like here. So the other day, I posted this in my Discord, okay? BBAI has been trying to run forever, right? It's been trying to run forever. And it got to a certain point. And last night, it got to a good point. And out of nowhere, a $2 million contract came in that was bullish. And BBAI plummeted. And it never, ever recovered that day. It wasn't able to get through that hump. You can see situations like that, or what you can see, and this is why I have this set up when I redo my result and I sort it. I sort it by the biggest amount of money. Because let's say I'm looking at it. Let's say somebody goes, hey, what did you think about this stock, okay? Let's just use Serve for an example, okay? So Serve got down, and now you can see the flow. I knew the second that Serve hit the bottom, after it had its massive sell-off, I looked at the options, and it's bullish as fuck. It's bullish as hell all the way up. And look it. They're bullish end of days. They're bullish 7 days. Some of the biggest contracts are bullish end of day, end of day, end of day. So I said to myself, as this flow was also coming in, everybody thinks there's going to be a recovery by the end of the day. And next thing you notice, the price jumped $1 from when we called out Serve. The options flow showed me it was going to recover. The Bollinger Band showed me it was going to recover. The Stoch indicator showed me, guess what? We're oversold. You're having a bearish cross or bullish cross. It will recover. and we recovered. So what else you can do is you can look for different flows throughout the day that are unusual. That's why it's called unfucking usual whales. Now, you can go down here and see, hey, why did an after hour? If these are, you'll see these massive contract premiums come in. You can see the flow of all the big guys, where they're going. You can watch it come in as they do it. You can go into, like I said, you can watch it come in as you do it. I watch the super flow. There's a whole bunch of things you can do. Like I said, I'll teach you guys this stuff if you get it. If you don't worry about it. Just use it in my thing. But the data is your best friend. I don't care what anybody shows you, tells you. You can never have enough data. And sometimes, I promise you, maybe not the first month, okay? Maybe you buy whales, you give it a try, you try to follow a couple plays. Maybe it doesn't work. Don't give up. Don't just stop. Try it one more month. Maybe next month you catch one unusual contract, one unusual flow. Why is everybody else down here and suddenly there's a random $10 million contract for 2 weeks out for a giant price? Because that's an insider fucking guy and he knows. This is how you track insider information. This is how you track those big moves that are about to happen. You see those unusual fucking contracts and you go, what the hell are they so confident for? I'm going to buy the same damn thing. And this is how you can make those giant leaps. You can definitely make your money on this back. It's very easy. You get one or two, you catch a couple things. Again, maybe you're sitting there and the chart setup looks great, right? Maybe the chart setup looks great. But just like on BBAI, it's a perfect example. The chart setup was perfect. We hit $10.90. It jumped back down. It jumped back up to $9.20, $9.50, and all of a sudden, that $2 million came back in, and it dropped to $8.88 and did not recover. That $2 million contract was somebody going, fuck, if this goes up again, I'm going to blow up, and they had to defend their position. So I guarantee you the point of control was right around there, and somebody had to defend it. Like I said, learning point of control, learning these things. I was not a good trader until about 4-5 months ago. I'm not going to sit here and say, I made a fall. 2 months ago, I made $13,000 in a month. That was fucking awesome. It was unbelievable. I lost a lot of it back. I lost like almost $9,000 right after when the market crashed down, but I'm already back up to like $4,000 or $5,000 of that almost. Mogul, I made $1,000 off that. Like I said, the life of a trader, you're going to be up and down. But over the last 4 months, like I said, I've made like $25,000, $30,000 because I just was like, all right, I'm going to start to learn this shit. I have too many people that I know that know what they're doing. I have too many resources, too much data at my fingertips to not take advantage of it, to not take the 10 minutes to learn. You could find a stock, you can find something, come up to me and just ask me. See, there's a big difference. If I don't, maybe you've asked me a question once and I didn't respond. Guys, I get a lot of DMs. But if you ask me a stock question, you show me a chart, you show me some setup and go, hey, what do you think about this? Ask anybody. I have never in my life had somebody ask me a chart setup. Maybe I missed it and they had to ask one more time, but I've never not responded about a chart setup. If you ask me about situations or a learning type opportunity, I will never not ever take the chance to. But if you ask me what a price target is, what I think it's going to jump to, I'm not going to worry. That's what I want you to figure out. Don't worry about what I think. I gave you the stock. What do you think? Where do you think it can go? Where do you see the resistance lines? Where do you see the support? Where do you see, the patterns, the history? Where do you see the indicators? What do you see is happening? That's what I want you to learn. I want you, instead of joining a $100 fucking Discord and following somebody for 4 months and only learning their plays, and yeah, you made money, but after those 4 months, you're still reliant on that person. I don't want that for you. I want you to be that person in 4 months. You should be the one now being able to open your own fucking cord if you want. I don't care. Have the knowledge, share it. This is how we win. But I got to get going, guys. Thank you for joining. You said if you guys have any questions, Twitter's always open. If you're in the Discord, it's always open. If you ever make good money on a play, you ever want to say thanks, I don't have Cash App, but again, just sub on. You can sub on Twitter. It gives me like $3. I have 55 subs, so everyone who subs, I appreciate that. Again, all goes to Baby Bigum's Fund, so thank you guys. Appreciate everything. Have a great day.